holiday season, it's here, we're in the midst of it. What are you seeing in terms of spending patterns and consumer behaviors as we do finish out these last couple of weeks? Chris, I'll start with you.
Okay, sure. So we're obviously, we're right on the other side of all these days that have shopping names like Black Friday and Cyber Monday. And really starting in October, so I'll just maybe zoom out and say quarter to date, we've seen the volume on our network tick up a little bit from the September quarter. And that's, it's been pretty persistent throughout the quarter. And then in the 5 days, like Thanksgiving through Cyber Monday, we've seen volume be several points higher than a year ago in terms of year-over-year growth. And so it's early, obviously. We're just sort of 5 days into the holiday shopping season, but I think we're off to a pretty solid start.
Nancy, from your vantage point, what are you seeing at Shift4, especially since you tend to be less on the goods side, more on the services side? Maybe that's where we start with the verticals where you're seeing the most traction and most activity.
Yeah, for sure. Our view of the economy is informed by the sectors where we have outsized market share. It's predominantly table service restaurants, hotels, stadiums, theme parks, and obviously we don't get that retail pump as much as Chris is mentioning. And generally all year we've seen very mixed same-store sales data across the board, with really table service restaurants probably faring the worst. But I would say if we're just really talking about the most recent data and from an optimistic perspective, we are starting to see some positive news when it comes to that table service restaurant. And it's super interesting because a lot of the sectors we serve in are more discretionary spend, and it really gives insight to kind of what consumers are choosing to spend their money on.
You say table side, and it makes me think of your CEO and co-founder, founder Jared Isaacman, comes on CNBC, and he uses the term, the last couple of earnings cycles, the steak effect.
Yeah,
steak effect.
For sure. I mean, we definitely think consumers are getting tired of spending $100, for a steak dinner. We're definitely seeing them probably turning down, going more to the QSR, the grab and go. So our vantage point is really that table service, and pretty much all year we've seen modest to slightly negative single-digit declines in that business.
So in terms of what you're seeing at Visa, goods versus services, I mean, international and travel, specifically cross-border travel, it's been on fire for a while now.
It's been really strong. Obviously, the last few years have been, there's been no real sort of pattern recognition, right? We went from zero travel, we went from very high travel to zero travel for a while, and then it really sort of just went, sort of through the roof for a bit. Now we've kind of stabilized, but if you look at, we just see volume on our data, right? And what we see, if you just compare US growth total, it's around mid-single digits, 5-6% right now. But travel volume is up around 13-14%. And so it's a pretty marked difference. And we track we have sort of two tranches of travel that we see across the card network. One is actually people moving, taking their card and traveling to another country. And then we see people that are purchasing cross-border as well. And so that e-commerce piece of it has also been really, really strong. It's been stronger than the travel portion, but they've both been strong. And so we've continued to see travel remain elevated compared to pre-pandemic levels. And that's sort of indicative. I think we all see it when we go to the airports as well. So.